Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 11th, 2025, and we're diving into Hooker Furnishings' fiscal 2026 second quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Hooker Furnishings, a leader in home furnishings, has just released their Q2 results, and there's a lot to unpack, from their strategic cost reductions to their focus on long-term growth.
Revenue and profitability overview. Let's start with the top line. Hooker Furnishings reported net sales of $82.1 million for Q2, a 13.6% decrease year over year. John, what are the key factors behind this decline?
The decline in net sales is primarily due to significant headwinds faced by their Home Meridian segment, which saw a 44.5% drop in sales. This was largely driven by macroeconomic pressures, tariff-related hesitancy, and the loss of a major customer due to bankruptcy. Despite these challenges, Hooker Branded managed to post a modest growth of 1.3% in sales.
And what about profitability?
Hooker Furnishings reported an operating loss of $4.4 million, up from $3.1 million in the previous year, largely due to restructuring costs of approximately $2 million. The net loss for the quarter was $3.3 million, reflecting the challenging environment and restructuring efforts.
Cost reduction and strategic initiatives. Despite the losses, Hooker Furnishings has been focusing on cost reduction and strategic initiatives. Can you elaborate on these efforts?
Absolutely. The company has executed a multi-phase cost reduction strategy, achieving $3.7 million in savings in the first half of fiscal 2026. They've also repaid $16.5 million of debt year-to-date, which strengthens their financial position. Additionally, Hooker Branded saw an 11% increase in orders, and their backlog is up 7% year-over-year, indicating positive momentum.
That's impressive. How are these initiatives expected to impact their future performance?
These initiatives are designed to enhance profitability and operational efficiency. By fiscal 2027, they aim to achieve approximately $25 million in annualized savings. This, combined with their strategic growth priorities, positions them well for long-term value creation.
Segment performance and challenges. Let's delve into the segment performance. How did each segment fare this quarter?
Hooker Branded achieved break-even results despite $655,000 in restructuring costs, thanks to higher average selling prices. Home Meridian, however, faced significant challenges with a 44.5% decline in sales, impacted by macroeconomic pressures and the loss of a major customer. On a positive note, Domestic Upholstery reduced its operating loss by 68%, signaling early recovery in indoor residential divisions.
And what about the impact of tariffs?
The recent 20% tariff on imports from Vietnam has posed challenges, particularly for Domestic Upholstery and Hooker Branded. However, the company is actively mitigating these impacts through strategic sourcing and pricing adjustments.
Future outlook and CEO commentary. Looking ahead, what is Hooker Furnishings' outlook for the rest of the fiscal year?
CEO Jeremy Hoff emphasized their focus on scaling the cost structure for profitability and preparing for the October debut of the Margaritaville collection. The new Vietnam warehouse is already operational, reducing lead times and enhancing customer service. These initiatives are expected to position the company well for future growth.
It sounds like they have a solid plan in place. Any final thoughts from the CEO?
Hoff expressed confidence in their strategic actions, stating that they are on track to achieve a new expense structure by the end of the third quarter, which will support a path back to profitability despite ongoing macroeconomic challenges.
EPS forecast and analyst discussion. John, analysts had forecasted an EPS of -12 cents for this quarter. How did Hooker Furnishings perform in comparison?
The actual EPS came in at my 31 cents, missing the forecast by 19 cents. This miss reflects the ongoing challenges in the home furnishings industry, particularly the impact of restructuring costs and macroeconomic pressures. Analysts remain cautious, but acknowledge the company's proactive measures to address these issues.
And what does this mean for investors?
While the EPS miss is concerning, the company's strategic initiatives and cost reduction efforts provide a foundation for potential recovery. Investors should keep an eye on the execution of these plans and any improvements in market conditions.
Key takeaways. As we wrap up, Hooker Furnishings faced a challenging quarter with a significant EPS miss and declining sales. However, their strategic focus on cost reduction and growth initiatives offers a path to recovery. John, any final thoughts?
Indeed, while the current environment is tough, Hooker Furnishings' proactive measures and strategic initiatives could position them well for future growth. Investors should monitor their progress closely.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Hooker Furnishings' performance in the comments below.